if you're in the Legion Fields or Marshall area, then you've no doubt heard Brandon Goswick talking about being your own banker. And you may be in the same boat that we were in, either not understanding or being very skeptical about what is this that he's talking about, what is this concept. So I was going to give a brief overview of kind of mine and Clay's journey and where we got to where we are, and just how this looks in our lives. So for us, we started getting fed up with how much money we were giving away, either to the government or interest rates, and started exploring different alternatives to the normal banking concepts. And according to Brandon, it took us 7 years of him trying to talk to us about this before we came around to his way of thinking. But for us, what it looks like is we've started putting money that we would normally put into savings into a whole life policy. And the reason why we're doing that is that this whole life policy actually earns interest on the money that we have in there. We have the option of borrowing against it. And then also, of course, it has the death benefits that you expect from a life insurance policy. So when Brandon starts talking about being your own banker, one of the examples that Leah gave to us whenever we were talking through this with them that kind of made it all click for me was the example of going to buy a car. And so in your traditional banking methods, you pick out a car, you go to the bank, you ask for a loan, they determine the interest rates of the loan, and then you get your car and you spend probably the next 5 years paying on that car, paying the bank, paying extra interest to the bank, and at the end of the 5 years, you have a car and they have all your money. With the being your own banker concept, what we would do now is instead of going to the bank for a loan, we would find a car that we want, and then we would take out a policy loan against our life insurance policy. Then we would pay ourselves back. And so over the next 5 years, I'm putting that money back into the policy. And at the end of 5 years, I have a car and I have my money back. And so for me, that was a light bulb moment. One of those things where I went, well, I like that a lot better than giving that money to a bank. So another benefit is when you're taking out a policy loan, there's no credit check. There's no tons of paperwork that you have to fill out. You just tell the life insurance company, hey, I want to take a policy loan out, and you fill out one sheet of paper, you submit it, and within a couple of days you have that money. So the process is much simpler when you are the bank. And so you may be asking, okay, that sounds good, but what happens if I die? Well, what happens if you die is your family still gets paid out, minus the amount that you owed on that policy loan. So to me, the risk was worth the reward when it comes to me being able to control the banking functions in our lives. So if you have more questions, please feel free to reach out to me and Clay. We'd be happy to answer any questions that you have. And then, of course, Brandon Goswick is always a good reference as well.